looks like risk back on the table as we head into December. The first couple of days being very positive. The rand trading back below R6.90 yesterday, and also for some parts of this morning as well. What's driving all this? Is it just the ECB yesterday?
Morning, Stephen. Well, yesterday particularly was a combination of domestic and international factors. Domestically, we had much better than expected car vehicle sales, as well as a really positive rebound in manufacturing confidence in the fourth quarter. But internationally, I really think much of the direction was taken from some better than expected US housing data, as well as the ECB's decision. I think markets really took heart from the fact that the ECB had previously been talking about withdrawing stimulus, but then yesterday conceded that as long as market conditions dictated, they would keep the emergency stimulus measures in place.
Well, you mentioned a couple of data points out of the United States, such as that housing data. And of course, there have been 18 data points this week as a whole. And for the most part, they seem pretty positive. And also globally, we had that PMI number coming out on Tuesday, and really nice numbers coming out of China, out of South Africa, out of the UK as well.
Yes, absolutely, Steve. I mean, this week's data has, on the whole, surprised to the upside, and I think that that's really also factored into this increased appetite for risk. And as you mentioned, particularly from the US and China, I think investors are starting to take heart that the recovery in the US seems to be gaining some traction, while China, despite substantial tightening measures by the authorities this year, seems to just be growing at quite a fast pace still.
And of course, we are getting some data out this evening. We get factory orders in the United States, and also the official unemployment rate and non-farm payrolls. And I should imagine these are going to be key for risk appetite going into next week, aren't they?
I would imagine so, Stephen. I mean, the Bloomberg consensus is forecasting that the US unemployment rate remained stable at 9.6%. They're also expecting an increase in payrolls for the last month. So on the whole, if that data comes in line with expectations, or even better than expectations, we could see that be positive for risky assets headed into next week, absolutely.
Of course, nothing on the local data front today. Going into next week, though, we do have that Reserve Bank Quarterly bulletin. What's that going to be telling us? Yes, Stephen, I mean,
the quarterly bulletin is undoubtedly the highlight of next week's local calendar. What we would most closely be watching for is the current account balance. We saw this widening of the trade deficit in October, so I think all eyes would really be on the current account to see whether that's widened or narrowed in the month. But given the slight uptick in consumer spending and economic activity, we would be expecting a widening in the current account. We've penciled in a percentage of 3.2% of GDP.
And of course, we did have that surprisingly big trade deficit earlier this week as well.
Yes, Stephen. So that would then be one of the main risks to the forecast. But on the whole, given rand strength and continued portfolio inflows, we would still imagine that only marginal widening of the current account, certainly not a huge discrepancy.
How about the rand from these levels? Because at the beginning of the week, we had that rand testing the R7.20 level against the dollar, with many saying it could have gone a lot weaker. Back around R6.90 at this point, do you think we're going to be holding on to the gains that we've made?
Certainly, Stephen. We still see the rand drifting slightly weaker towards the end of this year. But given the latest developments this week, there is of course a chance that there could be an assault on the 685 level. That's what we'd be. Rand to the dollar on the downside. So that's what we would be looking for. But our base case scenario remains that the rand is going to drift slightly weaker towards the end of the year. It's appreciated quite a lot against the dollar this year, so we're not expecting any huge moves as we head into the festive season.